Welcome everyone. In this video, I'm going to show you an incredible method that you're going to be able to take a losing trade, whether that be a stock trade or a crypto trade, and be able to turn it into a winning trade. So if you're doing a lot of stock trading or investing and you find yourself in a position where you purchased at an initial price and you're at a loss and you need to get out, I'm going to show you the doubling method today in this video that might actually be able to help you get out of that losing trade and not even just break even, but make it a winning trade. So there's going to be a lot of content and value-packed action in this video. So I hope you get a lot of value out of it. So let's get started. But before we move on too fast, I do want to say one thing. I'm going to put a little bit of a disclaimer and a warning to this doubling method for traders. So this method works under normal circumstances, but it will not work if you're buying poor companies or companies that aren't really making a profit or have that what I call tailwind, something I've talked about in previous videos. So let's give an example. As you can see with the slide on the screen right now, this is something where I say that there's no tailwind. You have that initial spike up. And remember, I always say this, whenever you see a parabolic rise like this, where you're going 90 degrees straight up, very dangerous, because this is a FOMO situation. There's no real fundamental or other than greed, FOMO, and people just driving up the price, because this cannot go up forever. When you see a situation where you're at the beginning of it, where you're at the beginning of the parabolic rise, and you're thinking, wow, the markets are great, this is going to go up forever. And then, unfortunately, people get stuck at the top and cannot get out. But then when I say that there's no tailwind, as you can see, you have that slow decline. There's nothing there. There's no fundamentals. There's no news. There's nothing really even exciting to keep it up. The company might not be profitable. It might be a meme stock where it was just driven up by this one FOMO trade, and then that's it. So what you want to look for is something with tailwind. This doubling method will work in a situation where you have a profitable company, a legitimate company that's making real products, making real revenue, and then that way you are able to see this method come to fruition and help you out. So I really want to help you out. The markets are pretty much tanking right now. It's a little bit of an up and down going on. The last couple of days, the markets have tanked in the morning and then rebounded luckily in the afternoon. But because the markets by nature, we don't know what's going to happen. I'm going to show you this method to be able to say, you know what, if you got into a trade at the wrong time and you really do need to get out, you need the money, whatnot, this will or might help you out as well. So let's get started. Let's talk about the doubling method, something that is very, very exciting. So before we get too far into it, if you want more Smarter Personal Finance content on being able to have your money work for you so you can live the best life possible, to spend time with your family and friends, subscribe to the channel right now if you haven't already done so, and make Yubi, the YouTube algorithm, happy. So let's take a simple example. Let's bring this up here. Let's take an example. You buy a stock, okay? We'll keep it nice and simple. You buy one share at $100 per share, okay? This could be a trading situation or a longer-term investment play. Doesn't really matter. You buy one share at $100. The total cost, very simple, $100. Great. What happens is next, you notice that the price drops. Price in this case, again, this is all an example, is dropping to $80. So what do you do with this doubling method is you got in initially at that first trade with one share. You simply double the number of shares on the second trade. So in this case, 2 shares. So 2 shares, you're going to get in at $80 per share. Total cost is $160. Okay, so very simple. We continue. The stock has dropped. So the stock has dropped now to $40 a share. And you're looking at it going, Okay, well, I need to buy some more. What did I buy previously? I bought 2 shares. So now I'm going to buy 4 shares at $60 per share. Basic math, 4 times 60, $240. So again, you notice the market continues to go down. Okay, so you get back in. You get in at a lower price. It's now hit $40 per share. So what do? Again, double the amount of shares that you have purchased from the previous order. So now this is order number 4. We did 1, 2, 4, and now we're going to do 8 shares. So 8 shares at $40 a share is going to cost us $320. So if we do the addition on this, first order, $100. Second order, it cost us $160. Third order cost us $240. And our final order cost us, there should be a dollar sign there, $320. So total cost for all of this is $820, what you've put into it. Okay? So now, if we break down the cost per share, so what's our average position cost per share? We take our total cost price, which is $820, and we divide it by the number of total shares that now we have accumulated in these 4 orders. Okay, we've gotten in on 4 different price levels at 4 different times. The last order, the 4th order, was 8 shares. The 3rd order was 4 shares, so that's 12. The 2nd order was 2 shares, 12 and 2, 14. And then the first order was 1 share, so that's your 15. $820 divided by 15 shares is an average price per share of $54.67. So here's the play that I wanted to show you, which is really, really interesting, which really could help you out. If you can, this visualization will definitely help you see what's happening. You get in at 100, you get in at 80, you get in at 60, you get in at 40, okay? But what you'll notice is that you don't have to get in or you don't have to get out at break even at your initial order, which was $100. So the great thing about this doubling method is that it allows you to buy on the way down. And the trick here is, and the advantage that it gives you, is you need just that little bit of a rise from the bottom order, from your last order, which in this case, as you can see on the chart, is $40. Once we get a little bit of a rise from that price, we can actually not only just break even, we can actually make a little bit of a profit. So as you can see, to go from 100, 80, 60 to 40, we don't have to go back even to 60, 80, 100 to make some money. We can just go up from 40, which is our final purchase price, to 55, and that's going to allow us to not only break even, but make a profit. So as you can see, we're staircasing down, and we're just waiting for that little bit of a counter rise to come back up to then help us make that losing trade to then be a profitable trade. So if we add up the totals, we spent, okay, remember in an investment, you got to know how much you're in it, $820. What is your sale? You got out at $825 and you were able to make a profit of $5. Now, here's the thing that we have to remember, what's really important about this one. You don't want to obviously buy at one price. The advantage to this strategy is that you're not buying at one price, and it's not so much as your dollar cost averaging, because when you're dollar cost averaging, you're putting in the same amount at different price levels. This is a little bit different. You're doubling your purchases at different levels, so then that way you just need a little bit of a rise to be able to get out. This is going to help you get out of a losing trade. If you need the money, you need to get out. But one important thing that I always say in trading, you never want to run out of cash. You always need to have cash. So best thing to do when you're trading is you always have an income stream to feed the machine, to then that way allow you to always buy at different levels, because stocks, crypto, it doesn't matter. You do not know, nobody knows what the price is going to do from the second you press buy, okay? That's the nature of markets. They're random, they're unpredictable. Nobody knows what's going to happen. So you always want to be able to have enough cash to buy at different price levels. And the most important thing, like I said at the beginning, you want to buy quality assets. You don't want to buy stuff that has this parabolic rise. If you see that parabolic rise, if you're going to get into it, know one thing. Make your purchase if you're going to do it, but make sure you put a very tight stop loss order. That way you're able to protect yourself on the way down. And then that way you really don't get locked at the top, because as I showed you with that first chart, you're going to see a 45-degree angle the wrong way, going from high left to low right. The perfect chart formation is a 45-degree angle going from low left to high right. And that's the perfect shape that you want to see, to know that there's a tailwind, that you have a quality asset, and that's going to help you get that little bounce at the end. Because remember, the key to this strategy working is you need the equity, the crypto, the stock, to bounce back up at one point, because you need to have a little bit of a bounce from that last entry point. Otherwise, if it keeps tanking, you're just going to be buying. And the other problem that you might con to this strategy is that as you're buying down, you are accumulating more losses. But like I said, eventually, hopefully, again, nothing's for sure in this world, and especially in markets, you are buying down in the hopes of that bounce at the end after your last order entry, to then be able to get you some more, get you out of that trade and get you a little bit of profit. So I hope you got a ton of value out of this video. I just wanted to jump on, share some amazing value content. Make sure to subscribe to the channel if you haven't already done so for more smarter personal finance videos to help you make your money work for you so you can live the best life possible. My name is Maher Abiad. I will catch you in the next video. Thanks so much.